Cisco Systems delivered record fourth quarter fiscal 2026 results. Driven by surging artificial intelligence, infrastructure demand, and broad-based portfolio strength, revenue reached $17.3 billion, up 18% year-over-year, propelled by product revenue of $13.5 billion, a 24% expansion. Non-GAAP earnings per share rose 23% to a record $1.22, bringing full-year earnings per share to $4.33, up 14%. Non-GAAP gross margin stood at 66.3%, contracting 210 basis points year-over-year due to product mix shifts. Fourth quarter AI infrastructure orders topped $4 billion, bringing full-year AI orders to $9 billion, led by hyperscale deployments. Acacia Optics orders exceeded $1 billion in the quarter, while Splunk integration drove double-digit security order growth. Cisco's technological tailwinds were anchored by scale-across cross-datacenter architectures and ramping systems powered by the P200 Silicon One chip. Guidance for fiscal 2027 reflects continued top-line acceleration. First quarter revenue is projected between $18 billion and $18.2 billion, with non-GAAP EPS expected between $1.32 and $1.34 for full-year fiscal 2027. Cisco forecasts revenue between $72.2 billion and $73.4 billion, representing 15% growth, with EPS targeted at $5.05 to $5.11. Hyperscale AI infrastructure revenue is projected to reach $7.5 billion in fiscal 2027. Evercore ISI analyst Amit Daryanani opened the Q&A session by questioning the durability of the 10% non-AI core growth implied in the fiscal 2027 guidance midpoint and asking why the forecast might lean conservative. Chief Executive Officer Chuck Robbins expressed pride in years of team execution, stating the supercycle is fully materializing as network refresh, campus upgrades, and security engines drive core expansion. Melius research analyst Ben Reitzes pressed on why gross margins face minor contraction in first quarter and full-year guidance. Chief Financial Officer Mark Patterson explained that gross margin experiences structural dilution from a higher mix of hardware and AI infrastructure, though increasing scale on proprietary silicon will yield gradual relief alongside a prudent forecasting methodology. Morgan Stanley analyst Meta Marshall asked whether the 14% year-over-year acceleration in security revenue signals that negative impacts from Splunk's business model transition have been fully digested. Mark Patterson confirmed security growth has turned the corner, noting that as base effects normalize post-integration, underlying growth momentum is increasingly solid. Wells Fargo analyst Aaron Rakers noted that the first quarter guidance implies over 20% year-over-year growth, while suggesting a back-half slowdown. Mark Patterson attributed the pattern to prudent posture on late-year comparisons, explaining that strong first quarter delivery timing will naturally transition to a normalized pace. UBS analyst David Vogt requested a bridge from the $2 billion trailing 12-month AI order figure reported a year ago to current performance. Mark Patterson detailed that Cisco realized approximately $4 billion in AI revenue and $9 billion in AI orders in fiscal 2026, entering fiscal 2027 with substantial backlog while reiterating that order flow remains nonlinear. JPMorgan analyst Joseph Cardoso inquired about enterprise client dialogue and the sustainability of corporate spending. Chuck Robbins highlighted that corporate leaders view this as the fastest technology transition in history, with CEOs actively spending to secure competitive transformation and avoid falling behind. BNP Paribas analyst Karl Ackerman highlighted 20% year-over-year growth in fourth quarter campus networking orders, asking how much Cisco Cloud Control contributed. Chuck Robbins identified a strong correlation between the two, revealing that roughly 4,500 clients have signed on following overwhelmingly positive feedback, establishing Cloud Control as a vital growth synergy. Bank of America analyst Zilberman asked about hyperscale order trajectories and the drivers behind the 30% year-over-year surge in telecom orders. Chuck Robbins clarified that fluctuations reflect prior year comparison basis rather than shifting demand, adding that AI order reporting metrics are being refined this fiscal year. Cleveland research analyst Ben Bollin asked about the origin of demand urgency, customer budget sources, and lead times for non-Silicon One products. Chuck Robbins responded that urgency is mandated by enterprise AI execution, while lead times across non-Silicon One product lines remain normal without supply bottlenecks. Cisco enters fiscal 2027 positioned at the center of the enterprise and hyperscale AI build-out,